If you've got December corn on your books right now, stop scrolling for a second, because the weather models just told us something that should change how you're thinking about the next 4 weeks. This isn't the usual "it's hot in July" story. Stick with me, because by the end of this, you're going to understand exactly what level corn needs to hold today, and what I'd be doing with old crop and new crop bushels if this heat plays out the way it's setting up to. Before I get into it, if you're new here, hit subscribe and drop a comment telling me where you're farming and what your corn looks like right now, because the weather is not the same in every zone this week, and I want to hear from you. Here's the setup. We just came off a week of brutal heat across the Corn Belt, and the models are calling the next 7 days the relief. Temperatures running about 2.5 degrees above normal on average. That's the good news, if you can call it that. The bad news is buried in the second week. Rainfall is expected to drop to 60% of normal during the 8 to 14 day window, and the heat doesn't ease off. It accelerates, running nearly 6 degrees above normal on average across U.S. corn country. And when you stretch it out through week 3 and week 4, you're looking at an entire month of July, where Corn Belt temperatures could be sitting 3 to 4 degrees above normal, start to finish. Now, I know what you're thinking. It's July. It gets hot. That's not news. But this is happening right as a big chunk of the crop is heading into pollination. That's not a small window where a farmer can shrug it off. Extended heat stress during pollination is one of the few things that can take bushels off the top before the combine ever rolls. And the models lining up like this, 3 separate windows in a row, is statistically significant enough that the market is already pricing it in. And that's exactly why December corn spiked the way it did to open the week. The charts back this up. We're sitting right up against a little trend resistance around 455. That's your line in the sand today. If corn can close above that level, the next stop on the chart is the old April low around 469.25. If it can't hold, you're looking at a fade back into the range we've been stuck in for weeks. So here's the read. If you're sitting on old crop bushels that are unpriced, and this market pushes through 455 today, that's not the day to get greedy waiting for 475. Get some sales on the board, because heat rallies can unwind just as fast as they build if the next weather run backs off even a degree or two. If you're looking at new crop and you haven't started layering in any protection, a bounce like this into resistance is exactly the kind of window you use. Not to sell everything, but to get your first increment done while the market's paying you for the risk that's still sitting out there in the field. One more thing worth watching. I wouldn't be shocked if there's some China interest quietly mixed into this move too, on top of the weather story. Nothing confirmed yet, but keep an eye on the export sales report this week for a signal. So tell me, how's your crop actually handling this heat right now? Is it road pretty, or are you starting to see some tip back showing up in the lower leaves? Let me know in the comments. I read every one of them. Bottom line, the heat is the story. The 455 level is the trigger. And whether you're selling old crop or starting new crop protection, this is the kind of rally you use, not one you wait out. Hit subscribe if this was useful. Drop your break even down below, and I'll see you in the next video.